The dollar versus Canada tried to extend to the upside outside of a very narrow trading range this week and going into last Friday, but it failed, and now we're making a new low for the week. I'll talk about the technicals of this very narrow trading range and what we can expect going forward in this video, so let's get started. Going back to Friday, I'm going to put a red box around the trading range that occurred over Friday, Monday, Tuesday, and into Wednesday. And you can see that the price was within a very narrow trading range between 1.3938 and 1.3968. That's only 30 pips of trading range. That's much too narrow. So what happens, you expect a break and a run, and we had a break to the upside earlier today. The price moved above the 1.3968 level, but as you can see, only by a little, and a pip or two before the price then started to rotate to the downside. Once we started to get back below the 200-day moving average, 100-hour moving average right through here, the buyers have found resistance on the little corrective move to the upside here. The buyers added to the sentiment to the downside and have since pushed below the low of this swing area, which comes in at the 1.3938 level, and that too has a push below that level just by a few pips. And as you can see, we're currently trading back above that level at 1.394228. Now it's not over for the downside or necessarily. It could be. And traders are, biting their fingernails and wondering if it's, especially if they're short, biting their fingernails and wondering if that momentum is really going to show up. So be aware of that. But you have to go with the break and look for some sort of extension at some point for this currency pair. And certainly the sellers are making a play in trading earlier in the North American session. Can they keep that momentum going, or will traders get stopped out if the price starts to move, maybe up toward this level right through here? The good thing is that there's not a lot of room between the low level at the 1.39338 level, and let's say a stop level at one point at the 200-day moving average, 100-hour moving average up here. So if you are more bearish on the U.S. dollar, more bearish on the dollar versus yen, dollar versus Canada, then put your stop up here and bite your nails and hope that we do get that break below the low again with increased momentum. Conversely, if you're a buyer, the ball's in your court right now, hoping that the price does stay above that level and we get back above the 100-hour moving average, 200-day moving average. So that's my technical look at the dollar versus Canada. Buyers and sellers battling it out, but trying to make a break. And at some point, we're going to get some momentum in the direction of the break. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.